Stephen Williams, co-CEO of Reabold Resources, been there since about 2017 when we launched the business in its current incarnation. So what is Reabold? So Reabold's in the business of developing otherwise stranded natural gas resources to contribute to the energy security crisis that we're seeing at the moment in the UK and elsewhere in Western Europe. I think it's worth remembering, you go back a couple of years when the Russia invasion of Ukraine was quite fresh, and energy security in Europe was a real cause of concern amongst people generally. It was a major topic of conversation. It seems to have been forgotten about to some extent. I think fortunately it's been managed quite well. The lights have stayed on. We've managed to get through it somehow for now. But I think it's worth remembering that this problem has not gone away. Supplies are extremely tight. Domestic supply is falling in the UK and Europe. We're increasingly reliant on imports from countries quite a long way away, in countries we don't necessarily have or shouldn't necessarily have complete trust in. And I think risks to supply disruption are only ever increasing. And this is going to be a major issue as we go through the next few years. And I think it's absolutely crucial that Europe continues to develop its own domestic supplies of natural gas as we manage our way through the energy transition. And just a word on the energy transition specifically, we see a view from a lot of people that, well, the energy transition is clearly happening, so surely oil and gas resources are worthless now. They're never going to get produced, they're going to stay in the ground, and everything is going to move on and the industry is dead. So I'd like to counter that point, and I would say that clearly, as our industry is fond of saying, it is a transition. The current supplies of natural gas in Europe are falling. They're always falling. That's how it works, because fields go into production and they decline and they stop producing. And new resource is always needed to fill the gap. And you can look at any forecast for the energy transition, and even the most optimistic ones that have very aggressive growth of renewable energy, and therefore a very aggressive decline in the amount of natural gas required, still require new sources of supply to fill in that gap. And again, I think it's extremely important for Europe that as much of that as possible is produced domestically. So what do we do specifically, or can I give a specific example of this? So the project that we've demonstrated success on to date is called Victory. Now, I think I mentioned that we look for stranded supplies of natural gas. We're not really in the business of oil and gas exploration, and we think there's better returns to be had at much lower risk these days by looking for resources that we know exist, but that have been stranded, and Victory was a prime example. So this is a gas field. It's in the UK, in the offshore. It's actually west of the Shetland Isles. It was discovered actually decades ago by a major oil company. At the time, there was no infrastructure around in the area. It wasn't big enough to support the development of its own transportation infrastructure. It didn't get developed. Gas wasn't quite so important back then anyway. Who cares? It all got forgotten about for decades. And ultimately, the field was given up and back in the hands of the government. And that's where we picked it up. So we picked it up for nothing. We spent a little bit of money on it, and we got it to a position where it was no longer just a known natural gas resource. It was now a project ready to go into development. Unfortunately, we couldn't develop it ourselves. It was too big, too expensive for us to do it. But we were in a position where we could take this back to industry, back to bigger companies in the industry, and say, look, we have this fantastic natural gas development project. Maybe you want to take this off from us and put it into production. And we sold it to Shell. We're very proud of this because the major oil companies have basically been leaving the North Sea and leaving the UK. And there are very few examples in the last few years of a small company actually selling their project to an oil major in the UK North Sea. But they've taken it on and they're putting it into development, and it's going to be in production in the near future. And it's going to be a key contributor to helping the UK retain its energy security over the next few years. So one other point on Victory. The UK government itself identified Victory as one of, I think, 5 or 6 gas projects that are identified as of particular national strategic importance for security of supply in the near to medium term. Because sometimes we get asked the question, well, how does a small company like you identify things that the big companies have missed? Surely they would have already seen this for themselves. But this is a key example of where they didn't. So this got missed by the bigger companies in the industry. It required a smaller, more nimble, more dynamic company to come in, take it forward to a certain level, and then we were ready to pass it on to Shell. We have 2 other key assets in our portfolio at the moment. West Newton, which is another gas field in the UK, this time in the onshore, and Colasanto, which is a natural gas field in Italy, also in the onshore. These fields have certain characteristics somewhat similar to Victory, and we hope to be able to replicate the success that we had at Victory over these next 2 key projects. So here's just our portfolio today visually. So the ones on the right-hand side that are slightly less bold, they're sort of legacy projects. They're in the portfolio. We will try and extract value from them at the appropriate time to the best extent we can, but I want to focus on the two core projects, which are the ones you see on the left. As I mentioned, West Newton and Colasanto, which is in the hands of a company called LN Energy. So starting with West Newton, it says that we've got a 56% economic interest in this field. It's in East Yorkshire. Just to explain the 56% interest, this is quite important from a funding perspective, as you'll see in a minute. It's actually made up of two parts. So we have a direct ownership in the asset itself. We also have an investment in the company that originally discovered it, a company called Rathlin Energy. And we're the majority shareholder in that company that continues to operate the asset. And when you add the two together, we get to the 56% economic interest. We'll talk about this in a bit more detail, but the key event here is we're going to be drilling the first development well later this year, which I'll talk about in a minute. In Italy, the field is called Colasanto. The operator of that field is a company called LN Energy. And again, our exposure currently is via a corporate investment into LN Energy, where we've been investing, taking an increasingly large stake as we funded their activity. And this is the largest undeveloped onshore gas field in Western Europe. So again, it's a significant asset of significant scale, which we believe is of strategic importance to Italy. Okay, so I talked about Victory as a sort of a template of how we want to take projects forward in the future. The other key thing, of course, is Victory has provided us with cash. So being in the oil and gas business at the moment, your capital is everything. There is an absolute shortage of cash available to do anything for various reasons. And the fact that we are funded and able to take our key projects forward under our current balance sheet is absolutely vital. So that's the key point to take away from this slide, really. And there's some details on the projects, but we'll come on to those on the next slides. So this is West Newton. This is probably our largest asset. So on the top, what have we done so far? So we got involved in 2019. Now again, this was a stranded resource. It was discovered first by Rathlin Energy, who I mentioned, they're still involved, back in 2014. So they made this very exciting discovery in the UK onshore. We certainly believe this, when it's fully proven up, will be the largest UK onshore gas field by some margin. But 2014 was a bad year to make a discovery. There was an oil price collapse, energy investment disappeared, they couldn't get any more money, the project became stranded, which is exactly what we look for. So we got involved in 2019, we funded the next 2 discovery wells, so there's now 3 discovery wells on this field, so we've got a very clearly identified resource. Since then we've had a bit of a gap in drilling, so 2022 was really about resource definition, seeing how big the scale of this was, and we got a competent persons report done which proved that we have a really significant resource here. And then 2023 is on there, and this is a really important piece of work that was done. West Newton is certainly very large. It has a lot of positive characteristics. It's onshore, which makes it cheap to develop, but it is a slightly complicated reservoir and is going to require a little bit of technical nuancing to get it to produce in the most optimal way. And 2023 was really about understanding that. The main takeaway we got is that the reservoir is extremely sensitive to water, and it had previously been drilled with water-based drilling fluid, which is common practice. So in future, we'll be drilling wells with oil-based drilling fluid, which should result in much better deliverability from those wells. And then just recently, in fact today really, we formally announced a revised development plan for West Newton, which is quite important. So I think I mentioned we were sort of forced to sell the Victory project because it was just too large for us to develop. It required too much capital. The previous development plan at West Newton was sort of similar. It was 100 million plus to put it into development post the next well. So we've come up with a new development plan now, which is staged. We're going to put the very first well into production on its own, start generating early cash, and that should allow us, if we want to stay in the project a bit longer and hopefully have a more valuable exit than otherwise would be possible. So what happens next? So the first thing is finalizing a funding solution for the development well. Now this comes back to my earlier description about how we're invested in this project. So we are funded for our own direct investment, but Rathlin Energy currently has a funding shortfall and has not been able to provide its share of funding for the well, which we're otherwise ready to drill. However, as I mentioned, we currently have a very strong balance sheet. We've just received the proceeds from the sale of Victory to Shell. And so between Rathlin and Reabold, there is now enough cash. So it may not be the case, but it may be possible that Reabold would provide extra funding to make sure that well is fully funded. And basically, we're now in a position where we can guarantee that that well gets drilled this year. So next step is to drill and test that well. And as I said, we can move into development as early as 2025 for hopefully less than £10 million under this new development plan. But then beyond that, there's plenty more drilling, plenty more to go for, and a lot of running room actually beyond West Newton in the area as well. So we think there's many, many years of exploitation available from this asset. This really is describing what I just talked about in terms of the funding potential. So base case plan has been that Rathlin Energy will farm out its share to a partner, and that's what will cover their funding shortfall. But as I said, we are now in a position to basically compete against that farm out process, and if we feel it's more economically advantageous, we can provide the funding required to drill that well. Okay, and then on to the other project, which is in Italy. So I already mentioned, I think, that this is the largest undeveloped onshore gas field in Europe. That, by the way, that comparison doesn't include West Newton, which needs it's one more well to become fully proven. This is not quite as big as West Newton, but it is more developed. It's at a more advanced stage. The subsurface here is completely proven. There is no geological or drilling risk. And in fact, there's not even any drilling required. So the two wells that have been that will become the production wells on this field have already been drilled and tested and are sitting there ready to go. One other interesting point about stranded assets, this was discovered again many decades ago initially, and several wells were drilled over the course of many years. But go back about 10 years or so, and a development plan was put together by the owner at the time, and it was too big, it was too large in scale, it was too ambitious, and I think therefore didn't really get the approval of the local community. So what's changed now is that we're going in with a much smaller, much reduced footprint, much more suitable development plan. Crucially, it's going to be across two phases. So a bit like West Newton, this is going to be a staged development concept. So the first stage is a fairly small scale gas to power concept. We are fortuitous in that there is a electricity line that we can connect into that runs right by the well site. So without really putting in place any additional infrastructure, we can put gas turbines on site, start producing electricity. This is only on a small scale, but we can get that electricity very easily monetized, and we're into cash flow very quickly, which is obviously very important. At the same time as doing that, we're applying for the final permits for the full production plan, which will be based on a micro LNG solution, which I'll talk about in a minute. And the economics on there I'll let you look at in your own time, but I think the key takeaway here is that without any additional drilling, we have a really material development from the two wells, which we're planning to produce at only half the rate that they tested at. So again, very, very low risk in terms of the ability of these wells and this field to produce according to the development plan. Now, micro LNG is a very interesting concept. So LNG is generally used for very large-scale gas developments in very remote areas where you have to turn the gas into liquid so you can ship it around the world. And of course, this is what Europe is now highly reliant on importing from countries a long way away. This is a different concept. So this involves turning gas into LNG on a much smaller scale, but then actually selling it as LNG rather than turning it back into gas. And there is an emerging and developing LNG market in Italy, which is highly valuable. More importantly than that, in Italy, LNG itself is seen as a transition fuel. So by using a micro LNG solution, you have moved from a fossil fuel to a transition fuel. And again, when we're going to and we're looking for the regulatory permissions and permits that are needed to put this thing into production, not only have we shrunk the footprint of the project significantly, we're now considered a transition project, which clearly gets a far more positive hearing from various bodies that need to sign off on this than was previously the case as a fossil fuel project. One other key point, we are partnered with, or strictly speaking, LN Energy is partnered with a company called Italfluid, which is a locally headquartered company, but actually a global operator. So a very large contract operator that will provide all of the operations, but crucially is providing the micro LNG expertise. Now, this is a fairly new concept, but they are already doing it with another AIM-listed company, Sound Energy, in Morocco. So we'll be the second company, which I think is probably an advantageous position to be in, because we can let Sound go through and prove it all up and work out how it all works, and then we can follow behind, and Italfluid will have the expertise to put this into production in an efficient manner. So that's pretty much it, really. I've not taken a full allocation of time, but just to conclude, so I think we've got compelling opportunities to add significant value to investors, but by doing something really important, which is contributing to the energy security issue within Europe. And we're very well funded to do this. We have the cash to take our projects forward, and we have a pretty catalyst-rich year coming up. So in Italy, we've got both the start of the early production system, so getting that project into cash flow, as well as we believe getting the approval for the full development plan should also take place this year. And then clearly at West Newton, it's the key year for West Newton. We will be drilling the well that finally proves up the field, fully proves up the field and the commerciality of the field, and will be the first well that goes into development and again into cash flow. So I think it's going to be a pretty exciting year for the company, and should also mention there is, beyond the current projects, we believe there is a full pipeline of other opportunities for us to go for as we move the current projects into either production and cash flow, or to the point that we again may choose to exit and then recycle into the next set of projects that are coming.
Excellent. Thank you very much, Stephen. So can I open the floor to questions? Any questions in the room? We've got a question just here.
Hello. My toy says that your share price has been as high as £5.
No, the share price hasn't been £5. I'm afraid. I mean, I don't know how far back you're looking. It may be
2007.
Okay. So
it doesn't matter which date I put in.
Yeah. Okay.
Current share price of less than 1/10 of a penny.
So let's just take the 2007 part away. That's
okay,
Reabold was launched in 2017. It came out. It went bankrupt and was reinstituted as a cash shell at some point, I believe, in about 2012, 2013, and then the current strategy was taken on by us in 2017. So I'm not denying that there's been a massive share price fall, but I think looking back to 2007, the £5 price is not really relevant to where we are
then let's go back
today. But
to
we can go back
2019.
Yeah, that's fair.
2019, it was 1.4 pence. And now you're a massive 0.082 pence.
Yeah, it's highly painful and frustrating. The main benchmark we use is 0.9, where we raised most of our money, which soon after that. So we need to go up by 10 times to get back to that point. So again, I think similar to the last speaker, we could talk about the various issues that have been impacting small companies, the fact that most of our institutional investors have been forced to sell. The oil and gas sector has probably been hit worse than anybody else for multiple reasons, partly just sentiment, partly the fact that it's been a really difficult place to be operating. And I think that's all the excuses to why it's happened. So then the next question is, what's the solution? How do you get beyond that? So what's gone wrong in this process is we've been raising money, issuing more shares, and then seeing sentiment die on us and people selling out, right? So the key now is to not raise any more money, clearly, because that's not going to work at these prices, and to find ways of funding the business to take it forward to the point that we can realize cash from it, which is exactly what we did with Victory, which is why Victory was so important, because we showed that within our own existing limited resources, we could take a project to the point that we can monetize it for a multiple of the money that we put in. And if we can do that again with the other projects, then we will have cash, a cash value, which is larger than the 0.9p, which I talked about where we raised most of our money. So that's the aim, that's the plan, and if we can pull that off, then anybody that invests at this level is going to have done very well.
I think I'll just stick with Shell.
I mean, we need Shell to do well too, because they're the guys that are buying our projects from us. So
we've got one question here, and then I think Nick had a question after that.
Okay, in the Italian system, you talked about a microgeneration system for the gas. What sort of size is that?
So we're talking sort of 3 megawatts, so it's pretty small. I mean, this is not material in the sense that it's going to move anything for us financially. The more important point, well, actually, there's a couple of important points from it. I think, firstly, it proves that there's cynicism about Italy, that you can ever get anything to happen in Italy. So the sooner we can get something into production in Italy, I think the sooner we kind of put that cynicism aside a little bit, which probably helps general sentiment. But more fundamentally, I think it also is very supportive of the approvals process for the full production piece of this, because again, you know, when you're dealing with a sensitive local community, the fact that you've got the thing up and running and it's working and nothing's going wrong is the best way of proving to a sensitive community that this thing is good for them and isn't going to cause a problem. Because there's obviously in our business people that go around trying to create scare stories and fear and trying to get things to not happen, and it's a good way of taking that on, I think.
Is there still some outstanding local objections in the current system, or is it all systems go? Or?
There are always local objections. There is nothing formal. There's no formal issue, but we're always sensitive to the local community. And that's something that's an ongoing thing. Even when you get all of your approvals ready to go, being sensitive to the local community is still one of the most important things to do, because you don't want that to...
But there's no sort of like legal objections to you continuing at the moment?
No, so at the moment we are at a sensitive but positive stage where every indication is that we are going to get approval for the early production system, and we are basically awaiting that to go through the system.
Okay, a question on the Newton in Yorkshire. How would the gas actually be delivered from the fields to the wherever it's going to go? Is it?
So this gets tied in by pipeline into the NCS.
Pipeline in of
So the good thing about West Newton, we're quite lucky, and this doesn't happen often in oil and gas, that the subsurface location where all of the resource is happens to be really well located relative to what's on the surface, which is quite unusual. So we are in a location in Eastern England which is really the energy hub of the country. So all of the southern North Sea gas gets pumped in to the UK onshore, exactly where our license is. There are CCTG power stations around. We've got major gas-fired chemical plant in the area. We're actually located right in the middle of net zero Humber, which is a big cluster of industrial businesses, huge industrial businesses that are committed to reducing their carbon footprint, ultimately to become net zero. These are all gas-fired infrastructure, and we are right there with the lowest carbon gas supply you could find, and it happens to be where we are. So the fact that we have to tie into infrastructure is inevitable, but we're probably located as well as you could possibly want to be to do that.
That's good, thank you.
Question just at, sorry, yeah, Nick first, and then question at the back.
Just on your one of your original slides, you've got a 50-something% stake in a thing called Danube Petroleum, I think.
Yeah.
And then there's something in America.
Yeah.
Are those just nice to have one day, or?
So they're basically giving what I said about capital limitations. They're just not taking any of our capital at the moment. So Danube is a Romanian business. We did drill a well there. We made a discovery. It was okay, but it's not as good as what we had at West Newton, for example. So we just stopped spending money on it for now. So I think we will go back to it at some point, but it's a capital prioritization question.
Do you think those have any value as they stand? Just to say, well, does somebody else want to take them?
Again, I mean, look, if I'm kind of trying to justify a valuation to an investor, I would say I would put zero on it.
Yeah.
But the reason I can say that at the moment is we're so poorly valued compared to the value we've got in our key assets that it's easy just to say just put that at zero, and then I don't have to argue with anyone about it. But I think there is some inherent value in all of those assets, but I just don't think it's relevant to an investor at the moment.
Many thanks.
Question about there.
Hi, can you hear me? You talked about multiples. And multiples going forward. I didn't see a multiple for the Victory project, just as a sort of ready reckoner for what you might look to invest and return on the two you talked about. Yeah,
so the reason that's a little bit complicated, if I gave you the multiple that we spent purely on Victory, it would be a much higher number than the multiple that we spent on the business unit or the private company that we had putting together some North Sea projects. So there are two, I can give you a range basically, right? So if you look at what we actually spent on Victory itself, I think we probably spent about £2 million. Bit hard to unpick, but it's probably about 2 million. And it was sold for 32. We didn't get the whole of that 32, right? But again, this is, from a project level, that's what was spent on Victory, and that's what it sold. So that's the multiple you can achieve under this strategy. We didn't get a 16 times multiple because we were buying our way into the project as we invested. So that's a smaller number. So maybe you're talking a 3-4 times type multiple, which is obviously still great. And that's why there is a portfolio approach to this. Like some of them work and some of them don't. That's inevitability if you're going to pre-cash oil and gas assets and you're trying to come up with a blend that ultimately gives you a good return. But the reason I like to use that example is, when people turn around and say, well, why doesn't a large company just pick this asset up in the first place? Well, I think for somebody like Shell, the 32 million is such a small entry price that it didn't really matter to them. But equally, we can spend far less than that and get a fantastically high return and still have something that's a very low entry price. So I think it's a good illustration of what can be achieved in this space, particularly at the smaller scale.
Excellent. Another question just there, Chris.
Yeah, fine. Thank you very much. I didn't see any records of revenues and profit and loss or anything like that on your slides at all.
No, because
You're just an investor
so
selling assets.
Our assets are we go into projects that are pre-cash flow, right?
Right.
And then we invest in the projects and then we take them forward. Now the question is, do you take them forward to the point of revenue generation, or do you exit them? And the one that we've taken forward the furthest is Victory, clearly. And so my point about Victory, we had Victory ready to go into development, and we then had a bill of probably about £150 million coming to fund it, which is a multiple of our market cap. And we don't have that much cash. I mean, there's just no way of us accessing that much cash. So clearly you sell it. So if we were a company that was able to fund the development, then you'd have a revenue forecast for next year, which would include the Victory revenue stream. But clearly that's not going to happen. So we instead take in a chunk of cash, which is effectively our revenue stream. Right? Now that might not.
And West Newton, do you?
Well, there were numbers on the Italian project specifically. West Newton, we have previously published forecasts for the old development plan, but again, that's one that always just begs the question, well, how are you going to fund it? Because you haven't got the 140 million that you need to put this into production and achieve this revenue, so what's the point? But of course, now we've come with the new development concept. We haven't yet published specific numbers that we literally announced today, that we've got this new development plan, so we'll see that crystallising to more detail in the near future.
Okay, thanks.
Any more questions in the room? Yep. One at the front.
I just had one about the size of the LNG market that you spoke about. Like, where do you see it going in Italy as well?
It's a good question. I mean, I don't have off the top of my head the quantification of it. I mean, we would be a tiny part of it, so it's not like we need to worry about it in that sense. But I think these transition. The trajectory of the various transition fuels is very difficult to call, right? It's the same in the UK. No one seems to know whether it's going to be hydrogen or what it's going to be, and it's the same in Italy. But it is interesting that they've gone down LNG as a transition fuel route, because they're basically, for example, you use LNG as a transportation fuel, and it displaces diesel, and then clearly that's a benefit to your CO2 emissions. So that's how you justify this as a transition fuel. If that continues to get traction, then the market is clearly immense. But we don't know to what extent that's going to continue to happen.
Yeah.
Any final questions? Quick one from me then, Stephen. You sort of talked about the two projects there. At the moment, I mean, apart from kind of capital, would you kind of expect to just focus on those? Are you looking at other opportunities right now?
So we're always
entry points, like perhaps that don't involve spending a lot of capital, I suppose.
Yeah. So we're always looking at opportunities, as you can imagine. But capital is the constraint.
Yeah.
It's getting to the point that it's not just our share price. I mean, valuations generally are just getting lower and lower and lower. So it becomes more and more tempting to try and add more things in.
Yeah.
But we don't have a currency to do that because we can't use our shares and we can't raise money at this price. So it becomes very difficult to access the opportunities, but they are there. I mean, interestingly, when we had a big slug of cash come in from Victory, we already had these two other projects. So they then became funded and able to take them forward. So that was the use of that cash. But if we were to monetize another one today, then for sure we would be bringing other things into the portfolio. I mean, there is no shortage of stuff to go for.
Excellent. Great. Thank you very much. Thanks, Stephen.
Thank you.
Cheers.